Let's talk about the ultimate swing trading strategy that I've used for the last 30 years that's made me profitable in the markets over time. It takes time to learn how to trade the markets. You don't learn to trade the stock market, the Forex market, or the commodity market in a day. It doesn't work that way, guys. Everybody seems to think that you can learn to trade in a day, you can make $1 million in a week, or, I watched a video, I went on a course, and suddenly I'm the best trader in the world. And unfortunately, what I'm going to tell you today might disappoint you slightly. And the one thing I'm going to tell you today is that the squiggly lines don't make your money. That's not where your money is made. Your money is made on a strategy, on how you approach your trading. It's got nothing to do with your system. It's got nothing to do with your win rate. It's got nothing to do with any of those squiggly line things, because the markets are 50-50. The markets are made up of buyers and sellers. So today I'm going to take you to the charts. I'll show you a system that I use, the price action system, which involves support and resistance, maybe a bit of supply and demand, that works. The system that will make you a high probability trade. But will it make you a profitable trader? The profitable trader thing comes after the charts, where I'll talk to you about how you can actually trade in the markets, how you can actually approach your trading so that you can actually make a profit. Because what's happening at the moment is you're relying solely on a system that you've paid, I don't know, how many thousands of dollars did you pay for your course? Let me know in the comments. That'll be interesting. I want to hear how much you paid for your course, because that course, great, it shows you how to trade. But guess what happens when you actually go and put real money in the stock market? Guess what happens to your psyche when you start trading with real money? Everything changes, because in our minds, we've got something called fear receptors. And those things have been embedded in our heads since the dawn of time. And the minute we try to do something out of the ordinary or a little bit risky, those things kick in the meanest way possible, and you just can't control yourself. You don't know what to do. You start making terrible mistakes. Suddenly all that training you had, then you walked away from, and you thought, well, now I'm the best trader in the world because I did that guy's course, and now look at me, now I know everything. I'm going to go and day trade 5-minute charts. Sorry, I didn't mean to laugh, but that's what it's about. The thing is, guys, what you have to understand in the markets is trading is risky. Trading is insanely risky. In fact, 60 to 80% of traders lose money swing trading or position trading, normal 4-hour daily charts. Money gone. The guys who trade 5-minute charts or 15-minute charts or 1-minute charts, guess what? Statistics show that 99% of traders lose money there. And I'm not talking about beginners, guys. I'm talking about guys who've been in the market for a long time, guys who know everything about trading, guys who know more about the terminology of trading than I do, because I don't play into abbreviations and terminologies, and the difference between a swing trader and a position trader and a day means nothing to me. Coffee with Rob, guys. Lovely coffee. But when you start concentrating all your efforts on these courses, on the names of things, liquidity, bullish, bearish, abbreviations for this, abbreviations for that, that's when you start losing concentration on what you actually should be concentrating on. And what you should be concentrating on, guys, is how to make money, how to be profitable. The amount of traders that talk about a win rate is insane. Everybody talks to me about their win rate. And for those of you who know me, well, let me introduce myself, guys, because I haven't done that. And I mean, for those of you who don't know me, I'm Rob. And for those of you who do know me will know that I don't play into a win rate. A win rate is completely meaningless to me, because all a win rate tells you is that you can win 9 trades out of 10 and you're a genius. No, you're not, because what you've done is you've won 9 trades, taking $10 off each win, and then you've lost 1 trade and lost $1,000 on it. But then you can turn around and say, but I've got a 9 out of 10 win rate. I've got a 90% win rate. Look at me. I'm great. Well, not really. You've lost a fortune. So I don't want to know about your win rate. Not interested in that. I'm not interested in how many wins you've got, how many green wins you've got, or anything like that. Not interested at all. All you need to worry about is your profitability. Are you making money? And I'm going to show you how to do that after the charts, how you can effectively manage your risk and approach your trading so that you can actually make a profit rather than losing in the markets, because that's what you're doing. You're losing because you're scalping, because you're working on win rates, because you've done a course, because you think your system's the best in the world. Imagine this, guys. Think about this. The market's made up of buyers and sellers. Loads and loads and loads and loads of buyers and sellers. How many of those buyers and sellers in the market do you believe trades because they want to lose? Go on. Think about it. How many of those traders actually trade the market because they want to lose or because they believe they've got a system that doesn't work? Okay, I just turned that around a bit on you, didn't I? Because now you're thinking, well, no one actually. Yeah, that's because every single trader in the market is there to make money. They all want to make money. Everybody's there to make money. I'm a trader. By nature, I'm an entrepreneur. By nature, I'll try to make money out of anything, okay? By nature, because that's who traders are. We're a strange species. That's who we are, okay? We're in it to make money. We do it for fun as well. We love it. We enjoy it. That's why we do it. And we also do it to get a better life and to live your best life. But when you say you want to live your best life, you also want to make money with that because you can't live your best life unless you have a bit of money on it. So, you want to make money. So every single trader out there wants to make money, and every single trader out there believes that they have the best system known to mankind or even the animal kingdom for that matter. So you can't tell them that their system's rubbish. Everyone's got the best system on earth. And I don't disagree. I think every single system that's ever been invented, every single system that's out there for you to trade on can actually work. Why would it not? I mean, everyone's tested it, everyone's back tested it, and everyone's proved that system will work. So if that's the case, then why is the stock market a 50-50 game? Why isn't everyone in the stock market winning? Why isn't it a 100% win rate? Why can't everybody get into the market and just win? Now you'll say to me, that's because some of the systems don't work. No, not true. All of the systems work. Every single system works. It's how you approach your system that doesn't work. That's where the failure comes in. That's what we're going to talk about after the charts. Let's go and have a look at the charts, guys, and let's come back and talk about how you can actually trade in the markets. So I'm going to show you the ultimate swing trading strategy that I use that makes me profitable, that keeps us profitable. Well, it's not the squiggly lines that make us profitable. As I always tell you, it's the psychology of trading that makes you profitable. What this is a high probability trade. What this is, it gives you the ability to choose a trade which will, in all likelihood, go in your favor, because that's what you're looking for at the end of the day, is a trade that will go in your favor. So that's the simplicity of it. This is Bitcoin, for example, and that's a supply level that I've put in there. There's a trend support, a trend resistance. Trend will always make it good for you, and there's a main support level. Now, there's three ways that we trade, guys, and the ultimate swing trading strategy. I don't use indicators. Firstly, well, three ways that we trade is we trade with a trend. Trend is your friend. The trend will always work. The next one is we trade in a range. We trade in a range. So, for example, if you look at this FTSE, for example, it's been in this range for a long time. Trade it short there, trade it long there. Green bars come out the bottom, you go long. The red bars come out the top, you go short. Really simple, really simple. And then we do counter trading, which you really need a breakout for, a break and a retest and that sort of thing. Where can I find a sort of a counter trade to look at? So, for example, if you were trading the US dollar, Canadian dollar, we've had this long run up here. You would want this price to actually come down, break through this now support, come back up, retest it and go down. The same way it kind of went up, it broke through, went up, came back, retested and went back up. A counter trade will be when it breaks the structure of this trend, comes out of this trend, goes below the lower low, and then you know the structure's changing around, and then you can counter trend or counter trade your product. But now, the problem with counter trading is that's the most riskiest one of the three. The least riskiest is your trend trading, and your range trading is somewhere in the middle where you can just keep on trading up and down until it fails. It will fail one day, but as we go, it helps to have that scenario. France 40, for example, was another classic example of a range where we said it would go long here no matter what the situation was in the country, and it actually did. But now, how do we pick these levels? How do we pick these levels up on any given trade? And it's actually not that difficult, guys. It's actually quite easy. I mean, for example, here's a euro US dollar, and you can clearly see that it's in a bearish trend. And now how you're going to pick up your levels from this. So what I'm going to do, I'm going to remove everything, remove 6 drawings. There you go. So many drawings on there. Too many drawings, in fact. don't put too many drawings on your charts. But all I'm going to say to you guys is the following. Now, what you get, you look at a picture, there's your picture. Now, what's the first thing you see? The first thing you see on your 4-hour chart is this is extremely bearish. It's going down. We know that now. We know that it's bearish. But what we do is we take it to the day chart. And then on the day chart, you can also see that it's clearly bearish. Now you know you've got a bearish scenario. But now you want to draw some support and resistance lines, and you just want to see where your price is so that you can take your trades effectively. Best way to do that is to move it to the line chart. Why do I use the line chart? Because I'm looking for closing prices. Closing prices are more accurate. On the candles, you get the highs and the lows, whereas on the line chart, you get the closing prices. And then all you do is you take in a resistance. Where's an area? A resistance is an area where the price gets to. It's like a magnet. Every time it gets there, it bounces off, because that's where all the orders are, right? That's where everybody's putting their orders, and that's what you're looking for, that liquidity, because you're not trading squiggly lines. You're trading against buyers and sellers. You're trading against human beings in the stock market. Just remember that. Whether it's Forex, whether it's commodities, whether it's indexes, it's a market that's made for you. So now we're going to draw resistance in. There it is. There's a resistance. There's an area at the bottom that it keeps on getting to and then turning around. Now you can draw trends in here if you want to and whatnot, but this looks very much to me more like it's in a range than it's in a trend. But there is a trend to the downside here that you do have to take note of. It is trending down, but you've looked on the day. You know what's happened here. It's trended down. It's hit support. Maybe it'll turn around. Maybe you can counter trade that trend in that range because you're trading in a range. Like I said, the range normally works, but it does tend to break. So now you've drawn two major levels in. Take it back to the candles. Now, why do I use red and green candles? Why don't I use other fancy colors and whatnot? No, because when I see a green candle, I know it's come out of support. When I see a red candle, I know it's come out of resistance at a glance. I don't need to look at anything. I don't even have to have these lines in. I can see which way the chart's going. This has told me that this is a bullish trade because it's come out of support and it wants to go up. You can draw a line in here, a trend resistance, just to see if you want it to break the trend, and that'll give you a good idea of whether you should take the trade or not. So on this particular trade, you might want to wait until it breaks that line just to break the structure before you take the trade. Then what you do, you go back to the time frame you're trading on. In my case, it's the 4-hour. Why do I trade the 4-hour on the swing trades? Why do I swing trade rather than day trade? Because if I swing trade, I don't have to look at charts all day. I can take my trade, I can go away, and I can come back later and check my trades. I'm not watching charts, I'm not changing my trades all day, and I'm not confusing the hell out of myself. The other reason I prefer to swing trade is on swing trading, only 60 to 80% of traders lose money, whereas on 5-minute trading, 99% of traders do lose money. There's a reason for that. It's because the charts are not reliable on a 5-minute chart. The prices are not reliable on a 5-minute chart. You're trading on 5, 6, 7, 10 pips, whatever. You're scalping the market. There's no science in that, guys. Really, there isn't. What you're looking for is an overall price direction. And what you can do when you're going over the charts, you can look on the weekly even and get a good price. So now on the 4-hour, we know that on the daily that's your main support. We know that on the daily that's your main resistance. Look for anything on the 4-hour that might give you a picture, like a supply level, a demand level. I do have videos on that in there. Just see if there's anything around, any trends that might affect you. Like I said, the line drawing through here. And then decide, just I want to buy, I want to sell. And that's as simple as swing trading gets, or position trading, whatever the case. I'd like to call it position trading because I put my position in, I go away, I come back and see how it did. That's why I call it position trading. Now, I'm going to tell you about the best swing trading strategy, position trading strategy in the world. I like to call it position trading rather than swing trading, because for me, swing trading is when it gets to the top, you swing it around, you go down, and it comes down to the bottom, and you swing it around, it goes back to the top. And none of us actually do that. Effectively, all of us will take a trade, get out, and wait for the next trade. So I like to call it position trading. You position yourself in the trade, and then you wait and see what happens. I call it position trading because it's on the higher time frames, the 4-hour time frame. Some of you might trade the 1 hour, some of you might trade the day. Same thing, guys, position trade. Now, how do you become profitable with a position trade? You can do it on the 5 minutes as well, guys. Don't get me wrong. You can trade futures, contracts, whatever you want, Bitcoin, spot crypto, it doesn't matter. Use the same approach to your trading. That's all you do. I'm just showing you on position trading because that's what we do here. We position trade. Now, let's say you have a $100,000 account, and I don't comment on that, guys. Really, Some of you will have $5,000 accounts. Some of you will have $50,000 accounts. Some of you might even have $1 million account. I don't know. Not my business. That's your business. I'm just using a $100,000 account as a round figure so that we can make easy calculations off it, right? Because we work in percentage effectively. And the maths behind it is so simple, it's unbelievable. And the logic behind it is so simple. Once it wakes you up, once you open your eyes to it, you'll be like, oh, why didn't I trade this way before? Here's the thing, guys. You've got a $100,000 account. What you do is you say, right, I'm going to risk 1% per trade every single trade. The trick here is not to change that, to keep it the same on every single trade. And why do I say that, guys? It's because the market's 50-50. In other words, if you take 10 trades, the high probability is that you will lose 5 and the high probability is that you will win 5. But the basis of the system or the approach is to make more on the winning trades and lose less on the losing trades. That's why we're keeping the stop loss the same across all the trades, no matter what. Don't think because I like trading that instrument, I'm going to trade more on it, and because I don't like trading that instrument, I'm going to trade less on it. No, you have to trade the same on every single trade. If the trade doesn't look good and you don't want to trade too much on it, guess what? Don't trade it. That's it. Walk away, because then you're not feeling good about the trade, are you? So you only want to take trades that have come to you. You only want to take trades that you feel good about. Then you'll take the full trade on it. So now you're risking on 1%, $1,000 on every single trade. If you took 10 trades and you lost them all, which is unusual, you lose 10% of your account, which is probably quite easily recoverable. So not the end of the world, right? You've risked $1,000 on your trade. Now you're expecting it to win, and it goes into a loss, and it goes down towards your stop loss. You do not dollar cost average. And you do not move the stop loss away. If it hits your stop loss, you've made a mistake. The reason you put the stop loss there is because it was an invalidation area. How do you place your trade? When you're going to go and place your trade, you have a look at what area you feel that if it hit that area, the trade would be invalid, you wouldn't want to trade it. Then you work out how much your $1,000 will be to that stop loss. That's your $1,000 stop loss. And then you work out the size of your trade from there. So if it comes back down to your stop loss when it's losing, let it take your stop loss, move on to the next trade, walk away. But if it comes down a bit and then it goes up into profit, because it always comes down a bit, doesn't it? If it comes down a bit and then it goes back up into profit and it moves up into the profit levels and it gets about $500, $600, $700 into profit, move your stop loss up to break even, perhaps even to a slight profit, maybe just a couple of $100 into profit to make you feel more comfortable. You haven't lost anything yet. It's amazing how we'll add to a losing trade, but we won't add to a winning trade, or we'll feel like we have to get out of it. Because, you know, it's actually, when somebody goes into a losing trade, they'll hold on to it. When it goes into a winning trade, that's when the fear really kicks in, and then you click out too early, and then it's the worst feeling in the world when it goes and hits your target anyway, and you clicked out at $200. What a joke. Stay in the trade. You've moved your stop loss up to break even. You were paying $1,000 for that trade. Guess what? Now you're not paying anything for it. In fact, you might even be making $50 profit on it if it comes back. Happy days. That trade is now free. Then it carries on going and it moves even further up. Maybe moves $1,000, $200,000, $300,000, $400,000, $500 in. Move the take profit right up, maybe even to one-to-one to the $1,000. Okay? And then it moves up close to your profit target of $2,000. Then you move the stop loss right up behind it. If it carries on going, you make more money. If it comes back, you make target. That's how you trade. End of story. No changes, no messing around. Take the emotion out of it. Don't get emotional about it. And if it goes into loss, take the loss. If it goes into profit, don't get itchy fingers and try and get out. Follow the trade as far as you possibly can. Just move your stop loss up behind it. You will end up with a mishmash of small wins because the stop loss will come back and take out a few of your trailing stops. And you know, that's life. That's how it goes. And you'll have a mishmash of small losses because sometimes when a trade goes into a loss and way before it hits the stop loss, I might look at it and say, oh, it doesn't look so good anymore. Gut feel, let me get out of it. And you'll get out of it. Unfortunately with those though, if they do go into a win, you're going to be upset with yourself as well. So yeah, consider that. But that's as simple as the system gets, guys. That's all you need to do. Guys, if you want a free Forex book, drop down to the description. There is one there for you. Go and grab it. If you want a funded trader account, go down there and get one for yourself as well. That's in the description. I'm not really a funded trader. I prefer to trade with my own dosh, but you know, it is there, and we are doing a thing at the moment on the live shows with the funded trader account, so it's a bit of fun It's fun to trade a market. So, like I say, free Forex book there for you as well. And also, guys, if you want the trade of the day every day and you want a video every day on what trades are going up and what trades are going down, a bit of rundown on the markets, join as a member, join the membership. We've got a great community here. We chat to each other. Absolutely marvelous, and we'll welcome you on board. So guys, thanks for watching the video. Hope my experience is helping you guys in one way or another. I'll chat to you soon at the next video. Come back for the live show tomorrow and watch all the last videos so that you can see how to trade with all these different systems. Thanks guys, ciao and bye.